That was very exciting and very, I would say moving actually, a very passionate and interesting look at local government and integration with blockchain. So we are headed into a session on retail banking, and I'm very excited to be introducing Michael Hiles and Joseph Lowe, and here they are.
Well, once again, I don't know how we follow that one. Oh, that's fine. Come on up. So Joseph and I have met recently as we started to prepare for this particular session. And how's that? Perfect. I'm not hiding behind it, right? So our session's retail banking, and so when I talked to Gerard and offered up, hey, we can talk about a few of these things, and then of course Joseph brings a completely different perspective with the awesome project of the Maven Federal Credit Union. Kind of seemed like a natural fit to talk about both sides of the equation. So my background is I'm the founder and CEO of a company called 10XTS, 10XTS. We're based in Cincinnati, Ohio. My personal background, really kind of spans information architecture. Spent about a decade in public record systems. In fact, Hamilton County, Ohio's Clerk of Courts, courtclerk.org. We won a Smithsonian Laureate Award for being the first to ever connect a judicial management system to the browser so that you could do a case search over the web. And a couple years later, we were the first to put a biometric device on a judge's bench so a judge could e-sign a document directly into public record with a thumbprint. So 10XTS we formed as essentially a compliance and government workflow automation system. And our approach is to revolutionize capital markets and banking. Joe, you want to come over? Oh, okay. Awesome. So we want to put blockchain and cryptocurrency into the perspective of the larger fintech banking universe. And I've kind of got it highlighted as number one on the list because it really does impact and affect the rest of the segments of fintech and banking. Starting with RegTech, because anything in banking, of course, has an immediate supervisory implication for the ability to actually launch and put together an information system that meets with the banking regulators. Now, the reason I'm talking about banking and retail banking is my company actually incubated and launched the fourth special purpose depository institution in Wyoming, and we received approval for our charter back in August of last year in 21. And so Commercium Bank was a effort to bring together the technology from both the front-end crypto side, but in particular with a focus on capital markets that I'll talk about here in a few moments. But you can see each and every single one of those pieces has an implication. So retail banking is going to absolutely change. The regulators know it. And by the way, I want to throw this out. I'm going to go off script here for a second. If you guys haven't seen, there's two immediate legislative actions. We're very proactive in the legislative space. In the past few days, a couple of big things have happened. The Competes Act is terrible. Call your representatives and ask why the director no longer needs to solicit input from the public commentary based on the change to the law. And then, of course, the SEC put out a comprehensive 600-page ATS, Alternative Trading System, update for public comment, but the window is only 30 days. Commissioner Hester Peirce has already dissented because it effectively will require even Etherscan to become licensed as an alternative trading system. So I don't know why and where these crazy ideas are coming from. And I say that as somebody who is very neck deep in banking and crypto regulatory function. I think that it's really a power grab and a power struggle between our agencies. We're still waiting on the White House to come forth with their executive orders. Apparently we have a new entrant into the space. But everybody who has a passion and an interest and any kind of a financial stake really needs to get on the phone. And we were active during the infrastructure bill. Senator Portman is my senator, and so I was working alongside Square at the time, Block now, their legislative affairs, who was coordinating the private sector side, and then we were running point with Senator Portman office, and we were able to mobilize the industry in about 2 weeks' time to broker a deal, which of course got submarined at the last minute by a senator who also wanted an amendment for his defense industry in Mississippi. So it's going to take the voices, and it's not just private sector versus public sector. So now I'll get back on script, but this is definitely, if you've not seen the current situation, you only have 30 days to respond. So legislative alert, get out on Google and look for the ATS SEC documents that were published yesterday. So there's 4 C's of crypto banking: computing, currency, commodity, and custody. So let's talk about computing. We, of course, have payment solutions, and then corresponding to that is the transactional audits, leveraging blockchain to be able to do the supervisory and the auditing in an immutable fashion. And of course, we had CipherTrace earlier and did a wonderful job. They are certainly leading the field. CipherTrace and Chainalysis are both forensic auditing companies. And when it comes to KYC, AML, identity, tracing the transactional history of actual transactions for wallet purposes, it's going to be very important to keep track of the upstream, and then certainly the downstream transactions that take place under a global FATF and OFAC standpoint. Then there's currency. Of course, we have fiat currency and stable coins. I think that the very recent discussions about the central bank digital currencies, and particularly the folks across the street, the Treasury Department, and a little bit of a departure from being so adamant about pushing a central bank digital currency. I think that there's a recognition now that the private sector has forwarded a adequate solution for fiat-based accounts that have been represented by a digital token-based form of account. Then, of course, there's crypto-based savings accounts, crypto-based lending. You will see, in particular, when the Uniform Law Commission gets done working on the revisions to Section 12 of the Uniform Commercial Code, that banks will be able to actually collateralize lending and take cryptocurrencies as a collateral and perfect that collateral for much cheaper than a rate that you're going to pay by collateralizing your interest in the DeFi markets. So that's actually emerging right now. Over the next couple of years, you're going to start to see the Uniform Law Commission and states taking up the amendments to the law that will impact retail banking. There are banks that are sitting on the sidelines, and we're in favor of small institutions. We like banks. I like having a local bank that I can walk into the branch and sit down and talk to the president of the bank. We've lost that in the United States. Banks have been consolidated upwards to these giant monolithic organizations. And we need a return. We need choices as consumers. We need personal relationships. And this is a wonderful leveling of the playing field opportunity for banks to actually enter new spaces and create new products and leverage these products. Not all banks are bad guys. In fact, when it comes to the stablecoin versus the central bank digital currency, in our current world where up is down and black is white, the banks kind of become the good guys when it comes to Fourth Amendment and privacy issues. Right? They're the last stopgap between the United States Treasury having direct real-time access to every single transaction that occurs in your personal finances on a real-time basis. Not real exciting to a guy like me. Then you have commodity. Of course, you have banks that are seeking the entrance into crypto exchanges, being able to buy and sell cryptocurrencies through trading desks. And then, of course, development of derivatives and closed-end exchange-traded ETNs and ETF products. You're starting to see banks leaning in, and there's a very strong interest. I speak very regularly to bankers associations and really work at the state level with a lot of institutions. And I can tell you that 2 years ago, when we started the application process with the state of Wyoming, we did it because there weren't any banks that could service my customers that were looking for custody for securities tokens. We're talking traditional securities, not even anything fancy like pure play digital assets. So now, 2 years later, they're all leaning in. They all know that it's coming. So then let's talk about custody. This is where a lot of folks don't like the idea of banks having control over your assets. But there is federal legislation, particularly in the security space, that requires custody. For example, if you buy and sell investments with qualified money, 401ks, for example, it requires a fiduciary custodian. Hard stop. And I can tell you right now, not a single regulator is liking the idea of roll your own wallet with a multi-sig approval. They really want the custodian to actually create and control and own these things. And then further, the SEC has very succinctly defined the three-step process for the settlement and clearing of secondary markets transactions of tokenized securities. So if you're buying and selling and trading shares of stock that have been tokenized in a company or limited partnership units, and you're trading on an alternative trading system or a licensed exchange, the SEC has agreed. Let's simplify this process. And we like that because now we're making things more efficient, which is ultimately going to result in better capital efficiency and performance for investors in the secondary markets as they're finding liquidity and buying and selling and trading in traditional assets that are now represented in a unit of account that's tokenized form. So part of our exercise is, let's take a look at some banks and see what the banks are doing. So one of the big banks that we follow is Silvergate. We like Silvergate. They started life as a traditional industrial loan company, actually, in the 80s, and then ultimately have converted into a formal bank charter and became a Federal Reserve member bank in 2012. And they really kind of blazed the trail as a chartered institution. And as a result, they now have upwards to $13 billion in assets. And a lot of that is crypto asset and cryptocurrency based. So their goal was to create the Silvergate network. And the ultimate goal was, can we consolidate the situation to streamline and put together a more streamlined approach to settlement of cryptocurrencies. What we're doing, of course, is our focus is in securities tokens and securities markets. And one of the reasons we spawned Commercium Bank was to provide an efficiency and bring radical efficiency to the legacy securities market infrastructure, where you have many intermediaries in the process, and you have one giant monolithic monopoly called Depository Trust Corporation. And we're effectively eliminating that in conjunction and working alongside the Securities Exchange Commission so that the network becomes the clearing and the custody for the exchange and transfer of securities tokens. So with that, I'll turn it over to my colleague, Joseph, who can now talk about how blockchain and crypto are changing credit unions with the awesome project of Maven Federal Credit Union. Well, you guys are pre-charter, so I mean, I can be on your board of advisors, right?
Absolutely. Love that. Thank you, sir. Thank you. Well, thank you for having me here today. I'm definitely not a master of toast or a public speaker. I barely have my associates, and I burn toast a lot. But this is something I'm very passionate about, and it's, so Gerard asked, hey, could you speak about it? So how is blockchain and crypto changing credit unions? Let's start with it. First of all, the crazy guy in the picture, that's me, obviously. I'm the co-founder and the lead organizer for the proposed Maven Federal Credit Union. We are currently in pre-charter status, which means we have been given approval by the federal regulatory body called the NCUA. I'm also a director for a company that builds what's called a CUSP, which is a credit union service protocol, which we are looking to build deployable credit unions. No different than you would go and download your copy of an Ethereum blockchain or your own Bitcoin blockchain as well. We want to make credit unions very accessible and, again, easy for people to deploy. So what are credit unions and how did they start? Let's start with a little bit of history. So in 1933, obviously we're dealing with the Great Depression in this country, and they created what we call the Banking Act. So the Banking Act is what introduced the FDIC and the SEC. FDIC was to basically bring confidence back in the banks. We were seeing a lot of collapses, and it was to ensure the funds that were in those banks. SEC was to regulate the markets and how banks participated in them. But one thing they found was the people were not protected still. Businesses and large commercial banks were. So in 1934, they introduced what's called the Federal Credit Union Act, and it was a form of regulation to allow depository institutions for the people without excessive controls and regulation, okay? It's a very good framework. So let's, a couple pointers on that. Anybody that decides to start a credit union under the NCUA, which is the National Credit Union Administration, it's a federal regulatory body again, they are exempt from the SEC and the CTFC, okay? So, or the CFTC. What we see in this, what's going on right now, it seems to be a big debate where people are like, we should be completely unregulated, and the other side of that is the SEC saying, well, you're selling securities. What nobody's looking at is what we found is why not just regulate your DAO as a credit union? It's near the same language. They introduced with the Credit Union Act something revolutionary. The account holders at the institution are synonymous with the shareholders, okay? There was no separation. So if you deposit money in a credit union, you own a share in the credit union. So what are some different innovations that credit unions brought to what we call today fintech? Well, for their day, they created the concept of peer-to-peer transactions. Since we're all shareholders in the credit union, we're peers. We all, you could have $1 million in a credit union, I could have $1, but we all still have one vote. We can trade in the credit union at the local tables there, and that was a big concept for its day. They first used touch-tone phone banking. It was actually Stanford Federal Credit Union that introduced in 1993 the concept of internet banking that we have today. And because we had internet banking, they introduced the concept of digital receipts. And digital receipts are what allows us to create things today like tokenized assets, right? All right, first to deploy shared branching. Shared branching is where you can go to any ATM within the network. It doesn't matter what credit union it is. You deposit the money and it goes in the proper account. You could be an ABC Credit Union and deposit money at XYZ, and it still goes to ABC Credit Union. Okay, and it was a federal credit union in Charleston, West Virginia that actually was the first to deploy remote deposit captures, where you could scan a check in versus coming into the branch. So what is the future of credit unions? Well, digital receipts can now be issued as tokens, creating a second layer of liquidity while assets are static. This will reduce costs and friction, and it'll increase velocity. Okay, centralized bank cores can be effectively converted to a decentralized and distributed ledger. So we've heard some people talk about what if we get hacked or what if there's attacks. The information's not stored in a centralized place, and any pain point or any part of the network can basically relaunch the blockchain and put it back up to operation. Okay, peers can transfer shares like currency, because when you go and deposit your money into a credit union, you get in exchange what's called shares. Okay, so now you can trade the shares like currency from member to member. You have zero transaction cost. And now you can do other things as well, like what if we could have federally insured Bitcoin? I mean, something as simple as that. A lot of people are asking, hey, I have Bitcoin, but I can't access my wallet. I lost my private keys. People can hack it. They take it. You send it to the wrong person, and that money's gone, and it's gone forever. One of the benefits of depository institutions that are insured by the federal government is mistakes can be fixed. Okay, so a blockchain credit union would actually be a fully insured Web3 bank. The other thing is a recent request for information was put out in July of 2021 by the NCUA. They wanted to know how could credit unions basically work with crypto. A lot of the members of credit unions wanting to buy Ethereum and Bitcoin. So I answered that RFI, and what they put out was they can start with third-party integration. This is obviously a slow process, not something that's going to happen overnight, but it's making tons of progress, and they're very excited. This is the federal government, by the way, we're speaking of. They're very excited by the concept of this new concept, not just integrating blockchain, but actually making the blockchain itself a credit union, okay? Let's talk about an example of a credit union that's actually accomplishing this. Maven Federal Credit Union is the proposed Maven Federal Credit Union at this time. It should be, we're looking at submitting for full charter at the end of February, the beginning of March. It's sponsored by the Government Blockchain Association. Let me explain what this means for a second. So banks, when you go to join banks, all you have to do is walk in, fill out the application, give them some money, and promise to keep your deposits at a certain minimum, and there you go. With a credit union, you have to have a common bond, and those common bonds to become a member are based on a couple different things. Geographic common bond, so a city. You could have a common bond based on an association. So our association here is around blockchain, right? And then the other is industry. So you could have plumber credit unions, you could have electrician credit unions, and so on and so forth. All right. So it is the first pre-chartered blockchain credit union in the United States and perhaps the world. It's a branchless network. Your deposit accounts, one big thing is if you go to one bank, you start an account. If you want to go to another bank, you got to shut down one account. You got to move all your drafts to the other account. You lose your routing number and your account number, and it makes it's a little bit of a nightmare. So with the invention of things like wallets, all you have to do is take your account and routing number with you and join another blockchain credit union without disruption. Okay. The blockchain itself becomes a savings and equity platform to where you can facilitate peer-to-peer loans, savings, and transfer of tokenized assets. You can find all this information at mavenfederal.org. The other thing is just to dream build a little bit. Like I said, what if we could have federally insured Bitcoin, federally insured Ethereum, any type of digital asset? What if we could have a tethered currency or a pegged currency where we know how many dollars are backing that stable coin or that pegged currency? The books are open, they're updated live, and we all have the ability to audit at any time. Nothing's hidden from us, and we all own the bank. Real quick, just to kind of show you the difference between a legacy bank core and a blockchain bank core. There's subtle differences at the top. This is different, a little bit different than just regulation. So regulation allowed for peer-to-peer transactions, but when they created bank cores in the ledgers, yep, there we go. I think we're coming back online. I'll wait. So basically, when they started creating these ledgers, they became this centralized technology where if you wanted to begin moving your assets between you and other peers, I'm going to talk about something you guys have no image to, so I'm going to give it a second. All right, so I made this really beautiful picture for you guys, this diagram. I really want you to see it. But anyways, I'll try to convey the message verbally. So they created this technology, bank cores, where if you want to trade your assets with a peer, you have to go through a clearinghouse, a centralized clearinghouse, which Then you have to have a third party involved. They have to transfer the assets for you, and they have to record it on the ledger, which creates labor and creates cost. So what is the difference between that and a blockchain bank core? Well, now individuals will each have a copy of the ledger. They can trade assets between one another, so there's no intermediaries. They mutually agree to the settlement of the transaction. They record it to their ledger and accept it by the blockchain as a whole. No labor is created and no intermediary costs are created. Therefore, we save money, zero. And if you can see it, we're open up to Q&A if you have any questions or.
You mentioned peer-to-peer loans. Oh.
Yep.
Good work, by the way.
Thank you, sir.
You mentioned member-to-member loans. Would the member making the loan have access to the applicant's credit or anything like that?
Absolutely not.
Okay. Oh, no.
And to augment and kind of go off that, we had a recent discussion with a partner of ours. We have a corporate credit union that is backing our deposits worth about $15 billion, and we have direct conversations with the federal agency that oversees this. So the concept is you come in, you KYC all that personal identity. Once we have verified and approved you, that information would then be stored into a security token into your profile. It would not be stored on a central server. Okay.
And there would be no way to validate either the identity or the worthiness of an applicant
It's
for
a
a
good
loan?
question. So the funds are federally insured, so you're not worried too much about the losses. Now, a couple things that are different. So with a bank, they're looking for the best applicants for the loans. With a credit union, you're looking to build credit. You're looking to help people who have no credit or may have bad credit. So what we'll be able to do is offer lending and a fixed interest rate and where anybody can get approved.
I have a question for Michael in regards to that 600-page ATS report.
Yeah.
Can you explain about the Etherscan or the government pressing for Etherscan to become licensed?
Yeah, so they're apparently trying to expand the definition of the requirements for the application of the licensure to include things that would ordinarily not require a full-blown ATS license. We're working through the 600 pages right now. My chief legal officer is here, and I'm not going to put her on the spot, but Andy Birchfield, we've been, working heavily on the dialogue.
Some of the exemptions that are presently in place.
Okay.
Yeah.
Okay.
They're trying to pull it back, basically, but in doing so, just like the infrastructure bill broadly expanded the definition of a digital asset and what constitutes the requirements for registration of these things, and do miners need to be licensed, based on a brokerage side. This broad brush stroke of expansion of the definition of what requires a Series 24 principal broker-dealer license within the additional Form ATS application. It's pretty broad, and it's very disconcerting that they've compressed the comment period to only 30 days.
Very.
And, it's 600 pages to start with, so it's going to take at least a couple of hours to just read the whole thing. So.
Are there implementing any regulations on the data science? So how Etherscan is basically like a ledger. You can see everything that's
Yeah, they're
going
basically
on.
saying that any network that pairs up buyers and sellers in a transaction for anything would require an ATS license, as I understand it. Is that true, Counselor? Yep. Yeah, I mean, that's basically what they're saying, is even if it's game tokens or rewards tokens, has nothing to do with securities or currency or any of that. If you provide a service or a network that matches buy side, sell side, which of course is, any network marketplace that, even OpenSea, right, would be subject to an ATS requirement.
Yeah, okay. And does that trickle down to individual sellers on OpenSea? So if an artist, let's say I create my project and I put it on OpenSea, have you guys had enough time to read through it and see if there's documentation that regulates like for artists?
I don't know that I'll have time with Commissioner Peirce tomorrow morning. We're meeting with the SEC Commissioner directly, and I don't know that I'll have time to get that specific clarification.
But if you read her dissent,
If you read her dissent,
Okay.
that is something she's calling for. She's
Yep.
wanting more commentary from stakeholders in the industry to ask those questions.
yes. So get out there today. I mean, literally, you got 30 days to submit a formal commentary or question asking these very questions. So,
Okay. All right. Thank you.
anything else?
All right. Thanks, guys. Great work. How do we start taking advantage of this in different communities? Like I mentioned, Miami-Dade County and other credit unions. Is there a way that you can offer some kind of like a layer or participation or collaboration with other credit unions for them to take advantage of this? Or maybe you can give some suggestions on like
I can speak
how
to
to,
the bank
yeah,
side.
on the,
You can speak to the credit union. So for us,
Yeah.
part of the strategy originally going in was to provide banking as a service to other banks so that we become effectively a clearing bank on the back end. Since then, we've also engaged. This year, we will likely be filing an IFE charter in Puerto Rico, who recently launched a form of bank charter there. And so that gives us access to some international banking rails. From a state bank standpoint, the jury's still out on whether the Federal Reserve is actually going to give us access to the Federal Reserve window, because there is a bit of a political tussle between the state of Wyoming and the folks across the street at the Treasury Building, which means that until then, we have to correspond with another bank. The SPDIs are non-lending, so there's a little bit of a distinction there, but our goal was basically to empower other local community institutions that would then want to engage in these things, and we just become a service bureau processor on the back. But I think, Joseph, you probably got some comment about, even Miami-Dade Credit Union for the good folks in the community?
thank you for that.
Yeah, so there's a couple ways or a couple forks down this. The main focus we're putting down right now is if you want to be involved, as far as Maven goes, or how do other credit unions get involved, credit unions can join other credit unions as a depository institution. So if, say, Miami-Dade or anybody is interested and they wanted to acclimate to this concept of a blockchain credit union, they could join the GBA or they join Maven, and they could begin putting their deposits there. The second phase could be we could look at creating a blockchain credit union template for them and slowly create a transition. What they're going to see, though, is they're going to see a reduction in building space because it's branchless, right? There's no need to come in and out, or they could turn their internals of their building into a place where members could come in and conduct business together as peers. So.
And this is already, you guys are already operational, ready to go? Are there any other things in the roadmap ahead?
So Commercium Bank has not been approved by the Wyoming Banking Division to actually operate yet. They're still going through their the charter was awarded and granted. And so there's an independent board, an independent management team. They are working right now to, basically build the tech stack, integrate with, whatever other tech stacks, but they got to have a core processing system in place to just open an account, right? And so they're going through those, current steps. Probably late this year, if things continue to progress forward, then the Division of Banking would then, of course, come in and approve us to operate. None of the 4 SPDIs have actually been approved to operate yet. So, Kraken was the first, Caitlin Long with Avanti, Wyoming Digital Trust, WDT, and then Commercium Bank was the 4th. I don't believe that they're going to accept any more applications currently. So it'll be the 4 of those institutions, and I think Kraken's probably the furthest along. They were the first charter to be approved, but it's quite an undertaking. It's to meet all the checks and balances from a supervisory standpoint, regardless of what line of business that you're in. Your policies and procedures from a compliance standpoint, and we had to submit all of those as part of the application process. Our charter application was like 1,000 pages. So we wrote a big book, War and Peace kind of a tome. And so then they go through and they check, okay, this is what you said you were going to do. Did you do it? You know, and so all that compliance and that audit process is, pretty strict. And, when it comes to the identity and the KYC, AML, and the account opening processes, it's serious business. It's not just, hey, can we just go hire Jumio or, Okta or, some provider, because it's criminal. When it comes to a bank, there's no private sector institution that has higher compliance requirements than a banking charter because of the fact that OFAC and FATF, they can lead the compliance officer out in handcuffs if there's an issue.
You want to add something to that? If not, I'll have one more question, which is there have been some requirements, capital requirements, to be able to apply to some of these programs, some of them very, very large capital requirements as well. Could you talk about the process and your journey, as sort of an alliance with the GBA, also a bit of a startup, also applying, and then some of the, applying in an area that has a lot of stringent capital requirements, and how you've maybe been able to bootstrap to get to this point?
Yeah, for us, the capital requirements are much higher. I think the credit unions have a very significant advantage based on the percentage of dollars that have to be put on deposit. Joseph can speak to that directly. We had to demonstrate that we had 5 million before they even accepted our application.
Right.
And then it becomes, really a function of how many assets are on deposit and a percentage of that on an ongoing basis. Now, the cool thing about the SPDI is the crypto assets that are on deposit are considered off balance sheet. So it's not actually counted as part of that depository side. It's really only what's in cash accounts that's counted as part of the depository requirements.
Has that worked in your favor or made it more difficult?
Oh, it makes it much easier, significantly easier.
Absolutely. Yeah, so to try to wrap this up for you really quick, Sylvia. So the capital requirements for us to submit charter, right now we had to go through what's the hardest part. It's called pre-charter, getting our field of membership approval done. So the, again, the NTA, a federal regulatory body, has approved GBA as an official and legitimate organization and said the field of membership is legitimate. So the capital requirements to submit for our charter, we're going through a fundraiser right now. Everything's donated capital, $300,000. We can take all kinds of different assets as well, so we count that towards the balance sheet. So we can take Bitcoin, Ethereum. We can actually take, if anybody wants to donate GPU mining computers, we would love that, appreciate that as well. We're going for $1 million raise, obviously, overall, because we need some capital for operational costs and in building what we call income earning fixed assets like Bitcoin mining operations. So this way the credit union pays for its own operational costs, and any profit earned from lending or investments can go directly back to all the members.
Wow, it's a huge accomplishment. Good job, guys, and good job to the GBA. Correct.
Thank you. All right, I appreciate it.